Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar pair back a bit from the gains that it saw yesterday, and we'll take a little bit of time. We'll just do a quick overview, and also we'll take a look at what's in the news or what's coming up as far as economic data for today. And be just one moment. Let's move this out of the way. Well, one of the things that did go on and push the dollar, and I think we're at a very, very key level, was the fall we saw here in the ZB, the bonds. And you can see here that, wow, this thing just kept on falling and falling. Came into some very, very key support. We're not that far away from it, and we'll touch on that later, but this is huge support going all the way back to 2009. And I think that although, like I said, when you get a big move like that, support can be, easily a half point away, and that's not even saying much. One of the things that I've looked at with the cash dollar is I'm still thinking that this is still, still bearish, and we're just hanging around here and look at the dollar going way back also. But my take is, when we talked about yesterday, past the point of diminishing returns, and even joked about, hey, dude, where's my rally? Is that each subsequent run back here in the dollar keeps coming a little bit less, a little bit less. We get these big moves in the dollar announcing trade news. It'd be huge, big moves. And then fast forward to a couple of Fridays ago, still a big move and decent move last Friday, just not as much. And then the actual announcement on Monday and just a rally of about 25 ticks. And then that's it. And so now what we're seeing here is, rates are just going like, bonkers, and we're just not getting any real lift in the dollar. We did initially a little bit, but not enough to really hang your hat on, and that's my concern here. And I think that we're into some huge key support here in the bonds. If we start to see a corrective rally, I think this dollar is just going to come under a lot of pressure. I don't think the bottom is going to come out of the dollar, but I think we'll come under some pretty good pressure, and we'll look at, and generally we don't look at too much of a longer term, but I think we need to. Looking here at the euro, I think we're at a key level. I did some analysis yesterday because I had to, you got to respect, like I said, respect the technicals. And I'll tell you what, I got long the euro, and I actually added and spun out of my ad. But tell you what, it kind of messed up in here is because, look, I didn't even notice this on the 2-hour chart because I was looking on the 30 minutes at the time. We had this, and I put this in the analysis, a medium-legged doji, which generally what that means is when you get generally referred to as a long-legged doji, but you'll get this medium-legged doji. Generally what that means is, or I'm saying what it means is, the bulls don't have control, you see on the upside, the bears don't have control, but it's only a medium-legged doji. But we finished smack dead in the center. And so generally what that means is, we take a run going the other direction of whatever the prevailing direction has been. So what has been the prevailing direction overall? Well, pretty clear what that's been, and that's this way. So if you take if you're going to get a correction, you go back. Now we held here, and that was key, but certainly the dollar was still holding its own here, so I had to respect those technicals and say, hey, look, we got some pressure here. Support comes in around 1620. You can see that clears the bell. And I thought, if they really want to clean the socks out and this dollar pops up, we could see a washout to take us all the way to 16, which would be 1595 and 1602 being the 61% of this, this move here. But we held just above our zone, and I like to draw on these zones, and here's that key zone, 1658, and we held. One of the guys was asking me yesterday, I think it was Dennis, or might have been Beans, was asking me in the chat room, hey, what would you spin out? And I had to think about it because I was like, well, technically it just, looks pretty weak here. But I said a 2-hour close below 1647, and that'll open the door for us to test lower, and we could slip lower. And where I came up with that was right here. See right there? So it'd have to be, they could take a stab below that, but a 2-hour close below 1647 would have me just bail out of my euro longs. I was able to spin out at 17 for an ad that I had here at 1669, but I'm still long, but I am a little bit concerned. I think we're at a key level, and I think why the euro might be having a little bit of a tough time, although things are starting to turn positive for the euro. And you can see here we broke out. We're defending it very, very well. I think, to me, I mentioned to him, this is our target, really, this 38%. But my thinking is, we break out of here, you're gonna run it real fast to 1791. And I think it's on, I don't know where, let's put it whether it was on a daily, but I think we'll make a quick move to 1791 before you kind of pause a little bit. Obviously, 1838 is huge, and eventually this market may resolve itself. But it's still a tough call to say whether the euro would really break out and really take off, and I think that has a lot to do with where the dollar would be. We still have a good economy. The Fed's still raising. There isn't anything to indicate that the wheels would truly fall off the caboose on the cash dollar index. I think that it's susceptible for a correction, and that correction may spook us to where I was talking about 92.80, but there's some good support here for the dollar in the 93.73, and we'll take a look at that. So I think it's a tough. I would have thought that the dollar, one way or the other in FX, we would have resolved ourselves by this time, and we still haven't. We're just still sitting here in the middle of trying to break out, maybe kind of paring back, but I think that the euro, the worst of it's gone by, but my big concern here for the dollar is how we have not responded in kind to, I believe, much higher bond prices. I'm still going to state the same thing here with the dollar yen. To me, it seems like the dollar yen, although it's still pushing higher, this dollar yen should be screaming at 113, if not even above. When you look at where U.S. rates are, once again, it doesn't mean sell dollar, but I mean sell dollar yen. But I tell you what, we should be going a whole heck of a lot higher when you look where rates are. And we'll get to that. We'll touch base with the bonds to give you a perspective of where we are with we're into some support that goes all the way back to 2009. So if we're there, why the heck isn't the dollar at least up at 97? And that's the same. So if we get a little bit of a correction here in the ZBs, this dollar is going to slide good but good. But we'll go on and get to that. Let's go and take a look as far as the news. So the key thing was the UK inflation, and we did get a pop here in the cable. Cable actually came into, remember there was our pause area of 31.70, and we got a pullback. And one of the guys just asked me yesterday, I think it was Richie. He kept scalping it short. He kept making about 20 pips or so, maybe a little more, and then he grabbed it, kept jump back out. And I think it was Richie who asked me again, may have been, or someone. And I said, I just don't want to sell it now because it's still open to the upside. And I go, but my problem is that I'll go in and go after something the first time it hits it, maybe the second time. So you can see here, it just about made it to the 31.70, and we saw a pullback. We made it a second time, we pulled back again. But once you get here, the market, wow, look, we just really broke pretty good here. And look, you see on the 2-hour chart, look here on the, I apologize, on the 30-minute chart, look at that. Wow. And look, we just had, look at this. Pretty good little fall here. Must have had some news that came out. We'll go in and take a look. Let's see here. I'm looking on Reuters. I'm not seeing anything right now. But we just saw a pretty good pullback here.
Hey, Pauline. Hey.
And we're looking here on the 30-minute. We just saw a real good pull. Look at this. Look at this little gravestone doji right here. And then the market just goes and breaks like a rock for 80 pips. Holy smokes.
Paulie, can you hear me? Paulie. May is to reject Barnier.
We've got this market moving higher.
He's not hearing us. He's not hearing us, Stelios.
Coming into almost some good support here, coming in at 30.85. Yeah. But really good move here with the cable. Blake says May is set to reject Barnier's improved Irish Brexit offer, and that's from the Times. I don't know if that's Times of London. So certainly we just saw this pretty big drop, and actually You look here, we had this gravestone doji right here. These really work out well, these gravestone dojis, because you pretty much know exactly where your risk is. But that came up quick as could be. So obviously big news here with the cable. Obviously went and just knocked the euro back a little bit too, and the dollar just popped up here. So saw some pressure. The dollar just traded 16.94, and euro dollar that is. So let me go in and get into the news. We'll do a quick overview of that. Says the Australian dollars firm as the market bets on China's stimulus. Blake was talking about this yesterday. The Australian dollar rallied for a third straight session on Wednesday as investors wagered China would take steps to support. We'll move this out so you can keep an eye on the cable. Would support domestic growth in its trade dispute with the United States. Risk appetite was also helped by news that North and South Korea has made some progress in denuclearization. Says analysts canceled, cautioned that the latest broadside on tariffs were a risk to China's growth. We now assume the U.S. government will eventually apply 25% tariff on all of its $500 billion plus of imports from China. We estimate a negligible impact on Australia's economy because very little of what Australia sells to China is re-exported by China. Australian exports to China are dominated by iron ore and liquefied natural gas. It's going to move on. Obviously, the cables still remain under pressure here. Sterling rises to an 8-week high ahead of the EU summit. Obviously, it had a lot to do with the inflation data we were just starting to look at when all of a sudden the wheels just came off on the cable. Brussels and London have made positive noises in recent days on major obstacles to Brexit, including how to keep an open door between British province of Northern Ireland and EU member Ireland. And we just saw that news from Blake just indicated that May was rejecting that. On to the dollar, 2 months high against the yen on trade war relief. Dollar held a 2-month high against the yen, and commodity currencies rose on Wednesday. Amid relief, the latest round of tariffs announced by China and the United States were not as harsh as the market expected. China and the United States plunged deeper into the trade war with President Trump levied tariffs on $200 billion worth of Chinese goods. Beijing retaliated with duties of about $60 billion on U.S. goods. German 10-year bond yields hit 7-week highs at 0.5%. Rallying world stock markets. The second factor is a bearish momentum in the U.S. Treasury yields, and third is supply. The German 10-year bond yield rose to 0.49%, the highest since August the 1st, and within striking distance of a 0.5% mark. If the risk-on environment continues to prevail, the boons could easily test the 0.50% threshold, which has never been broken since the end of May, said analysts at UniCredit in a note. Italian bonds continued to edge lower on Wednesday with 10-year bond yields at 1 basis point at 2.78. And foreigners buy U.S. Treasuries. Foreigners bought U.S. Treasuries in July, led by private investors. Data from the Treasury Department. Data also showed Chinese Treasury holders declined to $1.71 trillion in July, the lowest since January. Recall that during the month of July, the renminbi depreciated 2.6% against the dollar, and the data is lagged before the April emerging market volatility period. Japanese Ministry of Finance said earlier this month, domestic investors bought $6.3 billion worth of U.S. bonds in July after selling them the previous 2 months. They remain net sellers of U.S. debt for the year, totaling about $54 billion. And so hence you're seeing this continued weakness here in the bonds, but we'll go on and get to that. Let's get started with the bias chart. Well, we had our resistance at 1717. Actually, that was where they were ticking at yesterday, remember? So they just come up there at that point. So we kept the 1717, and that's kind of somewhat kept the market in check. Let's smooth this over so you can keep an eye on this cable. But let's take a look at where we stand here with the euro. Well, we came back to find support right here at this zone. Right here, we'll pull this back. And overall, I'm still bullish the euro, but certainly on a very short-term basis. I mean, right now, the dollar's trying to make the most of the rally as far as rates in the bond market, and it's certainly susceptible. But to me, like I said, we take a 2-hour close below 1647. We get a 2-hour close below 1647. That really is going to open the door for a test down here. And we'll see how that goes and plays out. For right now, I think we just have to go in and stick with the levels. And for right now, support's going to go in and come in at 1620. That's where we're at. But the problem is if we get a foothold below this zone, it's really going to open the door for a washout of stops down here to 116, and that's the risk. But we'll have to see how things hold up with the bonds. And I think we may not even find that out till almost throughout most of the U.S. session, I believe, because we've had a pretty good washout, but we're into some very, very key support. So we'll see how this holds up. For right now, I think we're going to have to stick with this at 1620. But if we get a foothold below this, that is good. Well, we're going to put just a nudge below that. We'll put right there, 1613, 1613. But right now, keys is 1658, the top of the zone. We have to respect where the technicals are, and if we were to slide, it's really going to open the door for them to come right on down. So we'll go with 1613 for our support. Looking at resistance, I don't see any reason to move this from the 1717. My thought is if we break above here, we're on a fast track to 1791. I think at that point, you get above this area, nobody's going to get in the way, and we're on our way to 1791. 1782 is going to be the 38%. My guess is we'll overshoot that by a bit. The real resistance the real resistance is coming in here to this, just above this 18, and we might get a little bit crazy. I think we could, if we were to resolve, and I'm just saying if we were to resolve, I think they'll make a fast track to 1791, and then going into the Asian session, that would probably take us around to this 18 and change, so we get the exact number here. Yeah, 1815. But if we get beyond these areas, I don't think anybody's going to get in the way of this thing. I just don't think they're going to get in the way here. So let's pull this back. That's where we're coming up with that 1717. We're going to keep that 1717, but as I mentioned, if we get beyond that, I would not suggest getting in the way of this thing. I think we'd make a fast track for 1791. So this is 1717, and still have to say it's within a range overall. Let's go and move into the cable. Cable, we kept that 3170, and that 3170 had been holding like a rock. That was our intermediate target, with an overall target going to right here at 3317. But we did get our intermediate target of 3170. We just popped up, and look where we ran out of gas right here. Here's this level zone here. Fell just shy of this 3217. And we saw that pullback on the comments. We know this market is susceptible to these headlines, and headlines we got with May not being too thrilled with the whole Irish situation, with what Barnier was recommending. So we just kind of knocked the stuffing out of the cable, trying to work a little bit higher. Right now, well, it's going to be the same area here, 3170. That would be the resistance for right now. Any move back here, the market will probably try and exit out any long. So we're going to keep the 3170 for right now. But you can see here they ran out of gas right there, 3217. The high mark was actually 3215. As far as support, right there at 3083. That'll be support, 3083. Just going straight there with the levels. Tell you what, we're going to keep it here because I tell you what, if they decide to clean them out, they're probably going to go just a little bit beyond this 3083 to spook the market. So we'll keep the 3072 here with the cable. So if they come down here and they test it, there'll be probably a bevy of stops from those who try and get long and say, look, I want to be out if we go just below these lows. And that'll probably open the door for 3072, and then the market could try and find its bearings at that point. So let's go and keep the 3072 for the support. And let's go and move into the Aussie. Well, look, lo and behold, look where we're at, 72.55. There's our resistance, 72.55, and we said they would use that as a target. And certainly that's what they've done. We got just above the 72.55. We can see the touches coming across here, and why that made logical sense as far as a target. We've had that 72.55 in place, but the market has not been able to make a move. This is where you may see the market kind of ease back, pause just a little bit. You may have got an overshoot, which we did not so far, right there. But like I said, 72.55 looking pretty solid as a rock. And you can see here the market made a couple of stabs, actually touched it 1, 2 times, and then third time it got above it, and then but we're just kind of languishing here. So we did make it to the 72.55. Anyone that's long probably take a little bit of a pause here. Until it's proven, we'll have to see. Maybe the dollar does go on and start to slide. If the dollar does slide, it would certainly push us beyond that. But let's stay with these technicals. For right now, we'll just say the 72.55, although I think the dollar could start to work itself a little bit lower, but that's to be seen whether that happens or not. So we'll stay with our 72.55, which what we had. Support now would come in right there, right here. 71.95.5. We'll just call it 71.96. That'll be support. And we'll go on and switch this over to the Kiwi. Well, Kiwi's just kind of languishing here with just a gentle upside bias. We can see here that we've had our resistance all the way up here to 66.59, and boy, it hasn't even made it to the 66.35. And we're trying to give it the benefit of the doubt. We'll keep it at 66.59, but so if the dollar does start to unwind a bit, that's where they would eventually try and move to / target. Obviously, there's a bigger line here, but that's not that far away. That's why I'm hesitant to go and go with that, and why we agreed with this, or pointed out the 66.59. Support, in the meantime, remains right here. $66.53. No real big changes here in the Kiwi that I can see. Just no real movement. So we'll carry on, move this back to the Aussie. So now let's go and move on back to the dollar CAD. Holy smokes, it has continued to weaken. It actually has moved into a key support here. Wow. Let's go move this in here to the 2 hour. There's that 29.73, and let's take a look here. I don't know, unless I had it right here. I'm not sure I would have kept it there at 30.05. But anyway, here's an area that we're looking at. You know what? That's what it came into right here. You see these touches here on the body? That's 29.33. I think that's a pretty good area. I mean, we've really not. This market's taking a good shellacking, and that's actually a pretty good area right there, 29.33. You can see that coming right across here, these body touches, and that's exactly where the market just ran to. So we'll go with that 29.33. This market has really priced in a whole heck of a lot of bad news here. But that's a good little area there right there, 29.33. As far as resistance, at least initially right now, it's going to be 30.12. 30.12. Any kind of move back up there, people go long here, that's what they'd be targeting. I'll move to 30.12. Be a resistance. We'll actually call it right there, 30.11. 30.11. This market is in one heck of a hurt. And when we look at it overall, this market is falling back into this range. It's moved to the lower part of this range. So this, I'm not going to say this market is bullish anymore. When we look further out, that would have to be a range here. So with that, let's go and move into the dollar yen. Well, we talked about this, the dollar yen. We came down here to the bias pivot, which was 1166. It defended the bias pivot, and we talked about it. As long as it's above 1166, is bullish, but I'm not a believer of the dollar yen. And that probably sounds crazy because look where we're at right now. But to me, I mean, the dollar yen had every chance to be really above, at least above 1279 as of this morning. And I point once again to where you've seen U.S. rates. Look, and I'm telling you right now, we're into some very, very, very key support. I'll just do a quick blow by here. on the bonds, and I want to show you a daily chart. This chart goes back to 2009. So look at this rally up here when the wheels were really falling off the caboose for the U.S. economy. And the bonds just shot up from, holy smokes, look at that, from 112 all the way up to 140 and change, actually a little bit higher. But when you look across this and these touches, that comes in right there at 40.22. I've been saying 40.25, but it's actually this whole 140 area is going to be key. But you can see here all these touches here, basically working like a bias pivot. Okay, actually we're going to go on and mark this off in red. So you can see where there's going to be a lot of attraction here in this area. Now, this goes all the way back to 2009, and I can pull this further out. You get this close, and then you're going to get movement on either side. But once again, like I said, if we start to see some demand, that may not even matriculate till you might get a little bit here, as people may start to cover some, but if we start to see this, we could see the dollar lose some of its momentum. Although certainly right now, it's looking a lot better at this moment. But when again, like I say, it's one of the concerns I have with why the dollar yen isn't in far better shape. I think the dollar yen should be screaming. Doesn't mean by any means whatsoever to sell, but it sure. I mean, if I'm long the dollar yen, I'm waking up every morning wondering, man, why am I not up 40 or 50 or 60 pips on this thing? And we're just kind of like holding people hostage up here. So that being said, where's resistance? Well, we have to respect the technicals, just like we talked about the bias pivot yesterday at 1166. If we make a run up here, it's going to be this 1279. I think that's way above the market, but now that's where we want to resolve itself. We do have some resistance all coming in here, actually just above the market right there, which is, I'm going to go in and put right there, 1252, basically 53. I'm going to go with that, 1253. I think it's really having a tough time trying to, I mean, it's not like as if these are 15-minute bars. These are 2-hour bars, and look how tight this range is. And yet you've got U.S. rates just taking off like gangbusters. And here we are trading in 20-tick ranges, 20-pip ranges. So I'm going to go with 1253 for the resistance. You can see that coming across right there, 1253. As far as support, well, obviously that's going to have to move much higher, and it's going to have to take something to yank this down. So the support wouldn't even be at the 1166. We have to come in. If the market would start to slide, where they'd find some support would come in before there, which would be coming in at 1181. Still a ways away down here, but 1181. Probably see a bounce from that area. Just remember. This is just, to me, it's amazing that we're trading in such a tight range, and why. You know, the key thing that I'd be looking at the dollar yen is, why haven't we triggered stops on the upside? There's no denying where we're at right now. I'm just saying this dollar yen, when you look at where the U.S. rates are, this market ought to be taking off like gangbusters, S&P still holding up very, very well. Got to give it to the S&Ps, but that's my concern here. And if you're long, to me, like I said, every morning you should wake up thinking, I mean, I would think, like, why are we up 60 pips? I mean, why am I not, like, wake up in the morning saying, fantastic, finally I'm up 75 pips from the day before, and we're just, this market's just barely hanging on, like as if U.S. rates were probably going the other way, barely hanging on, and look, U.S. rates continue to move higher, but the dollar yen just doesn't want to do anything with this. Let's go and move into the cash dollar index now. Well, we got a little bit of a blip just a few moments ago when cable came under pressure, but this market still remains, it's kind of like a wait and see mode, or it's just trying to determine what it wants to do. And I would have thought we already would have started to resolve ourselves lower, but certainly with the move that we've seen here in U.S. rates, and we've seen it also in the balloons, but U.S. rates here, making this move lower, you certainly would have expected the dollar to be a whole heck of a lot stronger. I mean, when I look where U.S. rates are, I would have expected the dollar index to be actually above 95.32, probably, you know, threatening a breakout, you know, maybe like around 95.40. So that's my concern here. I'm thinking, well, you know, this dollar, when you see where U.S. rates are, ought to be far more supported than what we're seeing here. So when I look at for resistance, if we get a jump, I think the resistance still comes in right here at 95. Nothing's going to go in and change as far as that, because if you do start to hit some stops, we talked about that here with the euro. If the euro slides below this zone, it's really going to be open to going and pressing all the way down to 116. You just have to know where your risks are. Just like the gentleman was asking me, you know, yesterday, hey, look, where would you end up putting your stops at? And I think a 2-hour close below 1647, that'll be within this zone, really would open the door for this market to resolve itself lower. We're holding on right now. The same thing with the dollar index. If you hit, you have some resistance at 69 and so forth, but it's really where the rubber meets the road is going to be at 95. I think the market would look to try and sell again there, and any moves beyond that, that would push us much higher. So for right now, resistance is still going to be 95. Actually, the funny thing is, 2 days ago, we had a resistance at 94.27. Well, we didn't make it at 27, but we got pretty close. But we moved it down here to 94.09. I'm going to keep it at 94.09. The same thing. If the dollar index makes a move lower, we'll probably even get even beyond that. But there would be some demand here, at least on some short covering here at 94.09. So we're going to go on and keep that one here. So this one will stay the same. I think we're just stuck in this range here as the dollar tries to resolve itself. But one of the things that, as I mentioned, is that I'm keeping a very keen eye on is bonds at this level. Now, usually when you see something like this, a market falls this hard, you don't see a snapback rally. I think, you know, it's an old analogy. I think Blake's used that before, is that, you know, it's like as if you sustain a pretty good fall. You fall off a ladder. You just don't pop up and jump up and say, okay, I'm okay. At first you kind of lay there for a couple of seconds and you kind of test yourself and like, am I okay? Am I feeling pain right now? I mean, do I feel like I broke my arm or I broke my leg? And then you kind of like, okay, I'm not feeling anything. Let me try and get up gingerly. I don't want to just step up and all of a sudden I got a broken bone. I do more damage. So generally when you see a market fall apart like this, even if they're into some key support, and we are into some key support, I went into that, you're going to start to, you know, try and, you know, ease and find yourself. Now, the support that I mentioned, and I'll just take a quick look at that again. This is on the daily, on the bonds. This goes all the way back to 2009. Now, yeah, there was overshoots here, but I'm just saying when you get a market like that, you're going to go back and forth. But you can see now, put it in maroon or crimson to show us basically like a pivot. And so you can see where the markets will overshoot before we turn around and go all the way back down. This is actually going all the way back to 2009. And you can see here where the market got up here to nearly 156, came all the way down, 16 handles, 16 full points, rallied right back up to 152, so back 12 points, came back down, sat there, and then we started work lower. The same thing. We've taken stabs on either side. You can still see the same thing here. I mean, but this is a pretty big key area here. And my thoughts are, wow, if the dollar can't take off when we got bonds that were at a very key pivot, if bonds would have fallen, we'd still see the move. You would have thought that the dollar would have been taken off at around, like I said, closer to 97. So my thought is, why the heck is it still sitting down here? So if the bonds stabilize and we see a little bit of a short covering rally, not anything huge, but I'm just talking about a point, you can see this dollar really come under some pressure. So this back here, we'll get back to that again. So despite all that, the dollar's broken out of this, and we're still hanging around here. I've got some thoughts on that too. I think that the dollar, one of the reasons the dollar is hanging around here, I think we're in a key area here. I did some work back on the dollar, going further back on a daily chart. This takes us all the way back to 2009 too. But this is a pretty key area here. Look at this coming across. That's 93.72. And so I think my thoughts are, if the dollar were to go in and go back here. There we are right there. It's actually 93.21. I think that if the dollar were to slide, we could see a yank down, which would take us below this 38%, but I'm not too sure how much further below that other than a quick stab, and that may take us to that 92.80 if it resolves itself. But the dollar has would have a lot of good support. I don't think that the wheels will fall off because the U.S. economy is not going to fall apart, and this whole China trade deal doesn't look like it's going to be resolved anytime soon. That's going to provide an underlying bid. I think the one thing that would trigger a move is if we get a little bit of a correction here, some oversold, some short covering, and just mild correction in the U.S. rates. That probably put the bonds $1 enough pressure to give us a swoon down. But I don't think the wheels are going to come off the caboose in any way whatsoever with the dollar. But my beef is that I think that we should be a lot higher, and it's not resolving itself either. It's not as if it's taken off. It's just hanging on despite all the good news. It's just hanging on. Matter of fact, we've rallied up here, and look, we're just kind of pushing back a little bit lower here. If we resolve, that's what I'm saying, you'll just go with the stops, and this thing will really come on down. The resistance is still going to be 95, and the support's going to be 94.09 for right now. And we're just kind of basically, it feels like we're just treading water here until we get some resolution. Cable's also starting to move back up a little bit. That takes us to gold. Well, we're still at this key level. There's that 1207 in gold, the daily breakout level. We're still holding this trend line. Nothing's changed so far here. We know we were lower here. Just gonna move this back. There we go. I always like to move the trend line across the bodies. I'm not interested in doing the trend line across the tops. This is where the market had to hold here. When we ran this trend line, it was actually coming in right at 1197 at the beginning of the week, which was coinciding with this horizontal support here at 1197, and it has held. And we rallied up a pretty good chunk of change, about $13, before coming right back. And then we're looking on here at 2-hour chart, had a nice little hammer bottom. We took off, but this market is still same thing. It's in a holding phase, and I think it's going to have to wait until we see a bigger break here with the dollar. Actually, the gold's holding up fairly well. When you think about even the S&Ps, look where the S&Ps, they're still holding up at these, at this upper level. And I just rolled it over falling into the December, but you can see here that a lot of things working against gold, if you think about it, and still gold's kind of is doing its best to hang on. I think eventually, same thing, if the dollar slides, we can resolve ourselves to the upside, and it would happen, I think it would happen rather quickly. That's what I'm saying, is if the dollar breaks lower, euro breaks higher, don't get in the way of this thing. You can see these markets really relieve themselves one way or the other, and I think that if that obviously were to play out, obviously relieve itself all the way and don't even get in the way. I think the first pause would be 1228, and then before it resolves itself up to 1245, might get a little bit silly and really take off. But that's all going to be precipitated on what happens here with the dollar index. So when we're looking at today for resistance, I don't think anything's changed. We're here at 1213. Actually, I have 1215, so we did mark 1215 for yesterday. We'll keep the 1215. Certainly, it still remains under pressure. Let's go back here. This is our 1213. You know, initially where the market's going to react, it's going to be the same thing. Well, you know, they may try and push it because, once again, like I said, don't get in the way if the dollar slides. And the only way this is going to get to this level is if the dollar slides. So my guess is I think the market may pause for just a moment at 1213, but it'll probably want to goose those stops. We might go to 1213, back down to like 1211 or 1210 and a half, and then quickly run up and tag 1215 before you see the market try and sit back. But once again, if the dollar starts to slide, I would not get in the way of this thing for nothing. So we'll stay with the 1215 for an actual reactionary, and we've had the 1204 holding here. We're actually going to move it to 1202, right here, 1202. If it breaks below that, total close in, that really opens the door for us to resolve the market to the downside. So we'll put this at 1202. 03 did work out well. Other than that, no changes on this. Now let's go back to the 30-year bonds. We had this 4105. Look, they blew through that like a knife through butter. And we got this huge support here. The only thing I'm looking at right now is going to be that 4010. 4010 right there. You can see it. And we'll spend a little bit more time on the bonds. So resistance is going to be right there, 4111. 4111. That would be the first target if we get a little bit of short covering. That may not even take place. I mean, we may not even probably get some value buying or at least some short covering down here, but we may not see this start to materialize. I think today we might see a little bit later on in the U.S. session. If we can't take out this area here, we may see a little bit more short covering. But once again, when we look at this on a daily chart, you can see this goes all the way back to 2009. And you can see here we're into a very key area, this bias pivot. You can see, I mean, right here how important this area has been. You come back for support, seeing nice bounces, come back, had a battle. Once we lost that battle, pretty good fallback here. I mean, you know, you're talking 12 full points and even beyond. And then once again, a run back up here to 140 and change, I should say. Probably overshoots it by about a 1.5, but you see a pullback down to 135, 5 full ticks. We rally past that, and that gets the stops covered. Look at that. We come back and find support at 140, and then from there it's up and away. And now here we are back here, and we're testing it again. We've actually come to this area here, rally back, and we're testing it again. Once again, if we can hold in this area, and that's probably not asking for a whole lot, probably just going to see a little bit of value buying, but if we rally back up here, which could take us easily to about 142.5, easily just for starters. But that's not the thing. I'm thinking even if we correct back, you know, 1.5 points, it's probably going to put a lot of pressure with the dollar. And that's what I'm looking at, and that's my concern. Same thing with the dollar yen. Look at the dollar yen. Look at these rates here, and that's why I'm doubting Thomas here. Look at this on this 30-year bond. I mean, we are just, when we talked about gold on the precipice, man, we've got the bonds on the precipice of support right here. I mean, we fall past this level, and you know we're going to push further. Probably do a little bit of an overshoot, just like you did here. But really, I mean, you would think that the dollar yen probably be at 13.25 right now. You're thinking, man, are we going to see 115? Do we see even higher? And it's like, what? You know what I mean? So that's what I'm saying. If you're long the dollar yen, you're going to be thinking, why am I not waking up in the morning and seeing a 50, 75 pip rally? And so, once again, you're in an area here that's very, very important for the 30-year bonds. If we just get a little bit of short covering, forget value buy, just a little bit of short covering, that probably sends the dollar, you know, moving somewhat lower and takes the wind out of the sails for the dollar yen. So this is what I'm keeping my eyes on. Matter of fact, you can see that right here on the 30-minute. Just trying to build up a little bit more, Just trying to build up. Just keep your eyes on that one. If you're trading the dollar, you want to keep your eyes on the ZBs, and as well as with the dollar yen. Let's go and move in now to the bunds. We're finally starting to see these bunds come alive a little bit after one heck of a fall here. That. So where would support be? Boy, this thing has gotten beaten up so bad it's not even funny. Right there is 58.54. And really, this market really come under some pressure. We're going to go back down there again. Resistance comes in right there. You can see the touches here, and it comes just above here. That's going to be 58.89. That's for starters there. 58.89. And the DAX, right there at 12,185. 12,185 for right now. That's going to be the resistance. So we've got a little bit of a blip just above here. But we'll go to 12,189. Support, you can see that that's clear. 12,106. 12,106 for support. We'll actually give it just a little bit of room just below here. Actually, it should be holding above that. It needs to hold and defend this area here. See right there? So we'll go with that 12,106 for the support. So let's go in and take a quick overview. We got the bias chart in place right now. Bonds continue to move higher from here. Key area for this euro is going to be to defend this zone that we've had in place. Actually, that's where they went to. But if we get a 2-hour close below 1647, that's going to open the door for them to go all the way back down to 116. We do have our support coming here at 1613, but if we get a 2-hour close below 1647, it's really going to open the door for this market to resolve itself lower. Although I think from an overall outlook, I'm still bullish for the euro, but it's having a tough time, as is the dollar. They're both basically treading water, finding which way to tip the hand. But once again, when you think about all the trade news and everything, or tariffs, and still the euro's holding up, and the dollar, I think, should be a lot higher. And then when you look where U.S. rates are, we're starting to move a little bit higher now. If we get some short coverage, and once again, we're into a very key area, we can start to see this dollar slip. But right now, everything's in a bit of a holding pattern. Same thing with gold, and I would say this for gold is that it's holding up fairly well. Gold could be somewhat lower. It's already come down, but it could be somewhat lower from here. So holding up very well also. Cable just took a quick dip when we came on the air on that Barnier, Prime Minister May, kind of dissing what Barnier came up with. But we're starting to recover. This is your area here, this 3083. Move this over. But we have our support in case you want to clean out down to, I think it's 3072. There we go, 3072. But right now it's holding up well, and we just kept our resistance at 3170 right here. But like I said, with every headline that comes out that's negative, the market finds a way to move higher. Here, here. Every time they get whacked, they bounce back. Not only do they bounce back, they make new highs. And pull back, rally, pull back, rally, pull back, rally, pull. So with each passing day, we just seem to find more. You know, if you're short and you're waiting, I'm just waiting for some bad news and I'll cover. The bar just keeps getting higher and higher, and you're thinking, man, at what point do I just go in and say, forget it, I got to go in and cover? And that's what I'm saying is each subsequent pullback continues to be higher. We already mentioned about the dollar yen. Certainly bullish when it's above this bias pivot, but sure as heck seems like it ought to be a whole heck of a lot higher when we look at where we are with U.S. rates. Bonds actually just coming into our resistance. We got it here at 58.89, coming right across here. See if they can push it, continue to push. But we're starting to see rates start to ease back a bit, and we'll see if these bonds can do the same thing themselves. They're already coming back themselves. But you want to keep, to me, that's the one thing that I've been focusing on since yesterday. And look, here we're now at 40.20. So we're good, probably good. Let's take a look. A good 13 ticks off the lows and into a key area here for support. I think we could easily see some quick short covering that probably take us up here to about almost 41 before the market dials back a bit. But keep your peepers on those bonds while you're tracking the dollar. And that actually does it here for us here at the European crossover. I'm not sure if Dale's going to be here, so it might be Blake that'll be coming in at the top of the
Can you
hour.
hear me?